All right. I think I'm recording. Am I recording? Okay, I'm recording now. So now with that all being said and done, let's just go ahead and get started with these webinars. Guys, welcome into the very first webinar that I'm actually going to be hosting for you guys. This is going to be the first of many webinars that I want to do for you guys. If you guys tend to obviously have a busy schedule or anything or miss one of these webinars, I'm going to have each and every single webinar recorded, and I'm going to go ahead and send it into the public Telegram room where you guys can go ahead, rewatch it, study all of that, and I'm also going to add it into the course towards the very end of it. As well. But like I said, if you are in this webinar, I very highly appreciate you. And I obviously know that you really want to seek this knowledge and become a very good trader as a whole in general. So the very big things that I want to talk about within this lesson is going to be a little bit about, or not a little, a lot about psychology. We're going to be touching up on my trading plan. We're going to be talking about what risk to reward ratio can get you as a whole, risk management, and then how to basically take partials and still be profitable within the markets, moving your stops, so on and so forth. So we're going to get straight into it. I am on a pretty tight schedule as of today. So that's why I did end up blocking the meeting and everything. So if people were to be late, I didn't want to have to wait for other people. I won't typically do this, but whenever I'm tight on schedule and stuff, and I obviously have to stay on top of things, I'm going to go ahead and do that. But getting into the trading plan, the very first thing that I want to talk about is you want to determine the type of trader that you are as a whole. Whether you are a intraday trader, whether you are a scalper, whether you are a swing trader, right? Swing trader being you're holding for multiple days on end. Intraday trader, you're holding for a handful of hours, if not maybe a day. And then scalping, you're literally just holding for no longer than 30 minutes, right? You want to identify the type of trader that you are. I personally am an intraday trader because I don't like holding trades for way too little and getting in on the very small time frames. And I don't like swinging trades just because of the fact that obviously whenever you're swinging, you're having huge retracements that I just do not like to see as a whole on my MetaTrader. Like, it's just not good seeing yourself being up 200 pips to all of a sudden prices retracing and you're only 80 pips in profit. That is not fun. So I classify myself as an intraday trader just because of the fact that I can very easily catch about 40 pips and be completely fine with it. 20 pips, 40 pips, whatever, so on and so forth, right? So now we're going to talk about the goal about my trading plan as a whole. If a trade is only a if a trade is only a trade, okay, I messed that up completely. That's funny. I'm not looking to take a trade, like I said, for longer than just a few hours. If I held it for just a few hours, I'll happily take my profits, but I'm not trying to take 20 trades a day. I need to fix this a little bit. This is kind of like wonky. But anyways, I'm not looking to take 20 trades a day just because of the fact that that's just going to lead me into over trading as a whole. And just over trading as a whole, as you guys know, even as an intraday trader, as a swing trader, that is not fun at all. Maybe scalpers, possibly, because they're taking multiple trades on end just because of the fact that obviously they're in and they're out of the markets very quickly. But for me, I only take 3 trades max in just one day. And we're going to get a little bit more into the rules down below. So we're going to talk a little bit about what I do on the weekends within my trading plan. This is my trading plan, so I have to do exactly what it says, right? So each and every single Saturday and Sunday and sometimes Friday, I mark up and analyze / recap every pair that I personally traded. So if you guys are in the course, you guys know that I preach about having a trading journal in there because you want to go back each and every single trade, winner or loser, and understand why that trade became a winner. Understand why that trade became a loser because of the fact that you're going to constantly be studying and seeing those same patterns each and every single time. And the more you see it, the more repetitive it comes into your brain, more likely, the more you're going to be able to retain that information, right? So coming back to it, I'm analyzing each and every single trade, winner or loser, and I'm also back testing each and every single pair that I trade. So I'm back testing gold, I'm back testing GU, and I'm back testing GJ throughout every single weekend and reanalyzing, right? My pip goal, I actually don't have a pip goal. I just have a percentage goal. I can be perfectly fine with just catching 15 pips, and that's my TP1, which is my 1-to-1 risk reward ratio. I can be perfectly fine with getting 30 pips, and it's my 1-to-1 risk reward ratio, or my 1-to-3. It's just all dependent on the trade as a whole. But my entire goal is just making 1 to 2% of my account daily. I am more than happy making 1 to 2% a day. As long as my trade has a 1 to 3 risk reward minimum, I am also happy taking the trade. The goal is to stay consistent with my risk management plan. It's not about how many pips you get. Like I said, It could be 10 pips, it could be 30 pips, and I'm perfectly fine with it. It's about the trades that you take with the least amount of drawdown and risk as possible, and still keeping your risk to reward intact. And not only that, but hitting your daily percentage goal of whatever you have set. Make sure, guys, whenever you're taking these notes, don't copy my word for word, because this is my personal trading plan. You have to fit your own personal trading plan that works for you as a whole, right? Because we are each and every single person, just we're different. We're different. You can be a completely different person when it comes to trading. You could be a scalper, and Johnny can be a swing trader, right? We're gonna have different goals. We're gonna have different things. Looking into the hours, just a little bit about the rules. I do not place a trade any time before 8 p.m. Central, because of the fact that, number one, markets are just choppy as a whole during that time, and number two, there is just not enough volume for the pairs that I trade. So why do I want to get into a very, very risky trade with very low volume at all? That's what tends to get people faked out in these markets. That's whenever fake outs happen. So leading off of that, the only session that I trade is my late Asian, early London session, like I said, because that is a time that there's a lot of volume, and that's whenever typically, like I said, I like to trade the most, late at night. Some people would like to trade in New York because it's very early in the morning. Some people like to trade London because they like staying up later at night, or it just fits their schedule as a whole in general. So you have to find out a session that very much so fits your schedule, but at the same time, you have a lot of volume within that session. So I highly recommend choosing either a London or New York session, or that overlap as a whole. But if not, shoot, you can be a weird person and trade Asian session and trade some sort of a pair that fits that time zone and obviously moves how it moves within that time. I don't know. Like I said, each and every single person is different when they come to trading. Now, coming down, enter on a minimum of either 4 confluences. I have to have 4 of these before I can place the either buy or sell button to get into position. One of my confluences is I need to wait for a break, retest, or continuation at a psych level, at a trend line, or after consolidation. So in a break and consolidation. Another one of my confluences is going to be a candlestick pattern, which is bearish engulfing, bullish engulfing, whatever it is. The next one is a doji on a major area, whether it is a psychological key level, whether it is a trend line, whether it is, like I said, a major break and retest zone as a whole in general, because doji signify neutrality. So if you are in a very bullish market and you get some sort of a print of a doji at a very critical break and retest point, or at a very critical key level, that more or less is showing you that there might be some sort of reversal at that specific point, and all you have to wait for is just a little bit more confirmation before you take that entry, right? The next thing is either bounces or breaks in trend line, whether it's my dynamic support, dynamic resistance, my channels, so on and so forth, right? That's what that means. Bounces off of my fib level / golden zone. My golden zone is my 38% to 50% on my Fibonacci, because it shows a lot of momentum within that trend. Market is trending in the direction and or a break in structure, whether it is a higher low, lower high, to just switching the trend, right? I'm gonna show you guys a little bit more live examples so you guys know exactly what I'm talking about. And then we have a moving average crossover and scoop, and I'm also gonna show you what that means. More quality trading, this is a must-have. Sometimes whenever I really want to be picky with my trades, this is one of the rules that is a staple that needs to be within my trading. And if this is not stapled in within my trading, I will not take the trade. I don't care if I have 4 confluences or 5 confluences, but if I'm being picky with my trades and I'll have this as my 6th confluence or as my 5th confluence, just whatever it is, I will not take the trade at all. This is a must-have at certain points in time, because this is a very, very critical type of thing that I like to use that shows me momentum within the markets. I typically like to use this when there's a lot less momentum within the markets. For example, sometime during December, like now, I'm going to now implement this as a must-have rule to my trading plan. Now we're going to get into the do nots. The very first thing is experiencing FOMO, fear of missing out. Whether you see a very big bullish engulfing candlestick and you're like, oh my gosh, I'm about to miss the big move. No, what you want to do is you want to scale down into the lower time frames, wait for some sort of a new higher low or lower high, depending which way the market is trending. And then you get in once you get a second confirmation within the bigger confirmation, if that makes any sense at all. So if you get the confirmation on the 4 hour, you want to scale down into the 30-minute and see another confirmation, or 1 hour, so on and so forth. Because typically with FOMO, that's whenever fake outs happen. So you got to keep that in mind. Entering a trade before 8 p.m. CST, like I said, low volume. another one of my rules is trade and take more than 3 entries in a single day. I will never take more than 3 trades in a single day, because after and beyond that point, I am just revenge trading or over trading. No revenge trading, experiencing greed. So that means me taking profits at whenever my TPs are hit, moving my stops to break even. And alongside with that, not telling myself, all right, I'm up 12K. Let's just get 10 more pips and I'm up 15. Like, no, because there's been times where I've been up in the markets and price is just completely reversed whenever it's 5, 10 pips away from my TP. So that's just a case that I'm just not going to have anymore. Excuse me, I'm going to drink some water. And then the very last thing is get cocky after a winning streak. So even if I'm up 10 trades in a row, just full W's, I cannot get cocky and be like, all right, I'm going to risk 10% of my entire account on this one trade, because what do you know could happen within that 10% on that one trade? Just because I have 7 whole confluences on that trade as a whole doesn't mean it's going to go in my way, because the market has a mind of its own and it will go in its own direction that it wants. Market doesn't have to respect all the confluences that you have in mind. Market is, like I said, it's going to go in the way that it wants to go, and it doesn't have to respect what you have planned for it to go, right? We don't control the markets, the banks do. So now moving off of my trading plan, we're just going to talk a little bit about risk management and risk to reward ratios. I have charts pulled up. I don't know why I keep burping. It's weird. Excuse me. Oh, I'm sorry. So let's look into this chart as a whole first, because I know last week I did not end off hot. I'm down about 2% from last week, so this is a very critical thing that I want to talk about, especially for the people in the signal room, mentorship room. This is going to be a very big thing, because I know some people in there are very disciplined within their risk management plan and still profited towards the end of the month. Some people just completely put in one trade and just blew their account, which is absolutely absurd, because I really preach about risk management as a whole a lot. So we're going to talk about a little bit of the power of risk to reward. So looking into this, if you were to risk 50% to only make 1, you have to literally have a 98% win rate to be profitable. If you risk 10% to make 1, your win rate has to be 91, and then so on, and vice versa. But look, let's just say you take a 1-to-3 risk to reward ratio. If you win 25% of the time, you're already profitable. If you're taking 1-to-5 risk to reward ratio trades, you're already winning 17% of the time. And guys, keep in mind, you're never going to catch 1-to-50s multiple times. You're never going to catch 1-to-10s multiple times. These are very rare occasions that these happen. And when they do, and when you find these phenomenal trade setups, literally if you win just 9% of the time, you're profitable, which is absolutely insane. So you can go through a losing streak of losing 3 trades in a row, taking 1-to-3s, but the second you take 1-to-5, not only do you just break even, but you make 2% back. Let's look at this one, for example. This is going to be like the whole percentage of everything, and just show you what it means as a whole, right? So looking at this, if you're constantly taking 1-to-1s, it's obvious. You're risking 1% to make 1%. You have to have over a 50% win rate, and you're going to be profitable. Scaling in just a little bit, bringing back up the 1-to-3s. If I lose, let's just say 6 trades in a row, I'm down 6%. But why? That's because I'm constantly risking 1% each and every single trade. So if I'm constantly risking 1% each and every single time on 1-to-3s, and I lose 6 of these trades, I'm down 6%. Let's say I catch 2 trades of 1-to-4. That puts me up at 8%. So 8 minus 6 is 2% into profit. This is where the biggest thing can come. You can go into losing streaks and constantly keep risking the same amount. But the second you catch one big risk to reward setup, can literally not only just make back all the losses that you made back of the losing streak, but can put you either at break even or back into profit. But if you do not have a risk management plan set up, whether you're like stapled, okay, I'm constantly going to risk 0.5%, I'm constantly going to risk 1% a trade, I'm constantly going to risk 2% a trade. If you do not have that plan set, you're going to be going into trades risking 5%, then you're going to be going into a trade risking 1%, then 10%, and then 20%. What happens if you lose that 20%? I'm pretty sure you're not going to want to put in 20% again, but if you do, then you're going to be down 40. And you're like, okay. I'm going to put in 40 because this setup looks so good. What happens after that? Your account's damn nearly blown. I cannot talk. that's whenever risk management as a whole comes in, and the trading plan, because the trading plan goes and correlates with the risk management plan. If I'm not risking 1 to 2% a trade, I'm already breaking my trading plan. And if I'm not risking 1 to 2%, not only am I breaking my trading plan, but I'm breaking my risk management plan as a whole, because of the fact that if I risk 10% and then 5% and then 2%, if I win at 2% and I lose at 10%, I'm not going to obviously make back my entire 10%, because I still got to catch more and more and more trades as a whole. So getting into a little bit of rant off of that, like I said, the biggest key thing is constantly risking the same amount each and every single trade, until you get to the point, like let's just say, for example, I have a handful of FTMO funded students. If you get to the point of being in profit 5%, 10%, maybe you can up the amount that you risk a little bit, but that goes back into your trading plan. Okay, after I'm up 5% on my account, then I'm going to start risking 2%. After I'm up 10% on my account, then I will start risking 2%. And then you got to stay at that 2%, and you're like, okay, after I lose 5 of these trades in a row, I'm going to stop losing 2% or stop risking 2%, and I'm going to down it to 1%, so on and so forth, right? Whatever makes the most sense to you and fits to your criteria is what you have to fill into your trading plan. So now with risk management and trading plan being said and done, I really fucking hope that this made sense, because if you cannot understand risk management and trading plan as a whole, I'm sorry, but you can have the best strategy in the world. You will not be a profitable trader at all. Now, getting into gold, if you guys have any questions at all about that, be sure to ask it in the Discord as well later on. So looking into what I'm talking about, let's just go into the backtesting pair, and let's talk a little bit about, whatchamacallit, setting TPs, taking partials, and all that stuff, and how you can just be profitable as a whole in general. And then what typically happens at these points of TP. So this is the backtesting pair that I did actually this weekend. You can see I have some losers, I have some winners. And then I analyze, why did I lose? Why did I win? All of that stuff, right? I even reanalyze my back testing pairs as to why I lose them and why I win them. So let's go into gold, because I looked at a clear example. I found a clear example whenever I was back testing back over here. I put the arrow down just so I can remember. So looking into over here in this general area, talking about, So looking into this, as you can see, risk to reward setup. What is happening within this general area right here? Scaling in onto the lower time frame. Where are we going? Come back here. Looking over here, what is happening here? Let's build up the confluence as to why I took this entry right here. We are in a downtrending channel, right? We have the dynamic resistance. We break past it, and what does price do after this point? We come back up and we retest it, and we're struggling to even maintain below it. So what is happening beyond this point? We are now holding above. So one of my confluences, we broke in trend line. 1, 2, break and retest point. That's 2. 3, we're waiting for some sort of a candlestick variation. We got this right here closing above structure, and looking into the lower time frames, it'll be a bullish engulfing. And number 4, looking into my lower time frames, we will have my SMAs crossed over. So what did I do? I targeted the next highs. Boom, right here. We hit it almost by the pip. What did that catch me? 1 to 3. Now looking into this, let's just say, for example, I was looking for another entry. What's happening here? We are holding this previous resistance, acting as a support. I had the confluences. I took the trade. There's obviously a lot of confluences within that one. Coming over here, what's happening here? We broke past previous structure. We came back down for the retest. Price struggled to basically continue on below. We get a bullish engulfing above. Price continued to trade up. So what did I target? My first TP each and every single time is my 1-to-1, because I do not know what happens after my 1-to-1. I would like to take my profit of whatever I risked at any time that I possibly could, and if not half of it. So price went up, hit my 1-to-1 risk reward ratio. So what am I going to do once price, anytime price hits my 1-to-1 risk reward ratio? I'm always going to be risking 1%, 2%, right? Let's just say I'm risking 1%. As soon as price hits my TP1, and if I were to take half of my profits, I'm taking 0.5% off the table, right? I'm taking 0.5% off the table. After I take 0.5% off the table, I'm moving my stops instantly to break even. Because why do I want to risk any of my profits at that point once the market gave it to me? Guys, each and every single TP, you want to think about that specific zone being a magnet, right? What happens with magnets? It attracts. It's like finding a sexy ass girl. What do you want to do to your fine ass girl? You always want to touch her, right? And whenever she's not in the mood, she slaps the fuck out of you, right? It's the same thing with these zones, support and resistance zone. What typically happens at these zones? If price doesn't like what it's doing at that zone, it's going to slap the fuck out of it, either up or down, right? That's why it's called support and resistance zones. These are pivotal zones. These are reversal points. Price can do anything at this specific point. So why do you want to take the risk of price coming all the way down and it hitting your stops when it already gave you the profits and hitting your TP1? Shoot, if anything, you can take your entire profit that you already risk if you're happy with it. If you're happy with the amount of profits that you make, you have to just go ahead and take it. Another rule of thumb that I usually did was back in the day, whenever I wanted to whip out my phone and just like send my profits to a handful of people, I'm like, if I do this, I have to take my profit, because I'm only doing this because I'm happy with the amount that I made, right? Because why else? You wouldn't want to flex if you're up 50 cents to a friend because you're not happy with that. But if you're up $100 and price risked 50, then, I mean, if you risk 50 and price gave you $100, you're going to want to flex it because you just made back a 1 to 2, right? And not only that, it's $100 of you clicking a button. Whenever you do that, what do you feel? You feel happiness. You're like, damn, I just fucking profited this, you know? So that's whenever you want to take profit. So like I said, each and every single time that a TP gets hit, I always take half of my profit, move my stops to break even. And typically if I get stopped out and price wants to go and continue my way, I will possibly take another re-entry. But the probability of my setup has to have very, very good confluence. And I just have to be completely confident. If not, I just will not take the entry. I'm done for the night. Up 0.5%, up 1% if I'm risking 2, so on and so forth. I'm completely fine with that. That is the power of taking partials. That is the very big power of taking partials. Looking over here, what happened here? I took a buy position. I saw price closed above the previous highs, and I got faked out. Boom. Basically stop loss right there. People could have taken the sell right here. They got stopped out, wicked out. That typically happens with gold. What happens here? More selling pressure, but I didn't take this because of the fact that I was in a bull market, right? So price could have very easily just continued back up. I took a buy right here, had basically gotten stopped out right here because of a stop hunt. It happens. Looking down over here, what happens here? Price holds this support very nicely. I look for my confluences in my time frames. I take my buy position after I see my entry signal. And what am I targeting overall? My overall target every single time will be the next key level. And my key level is my bigger time frames. So looking into my zones on my daily, what do you see right here? You see a daily support, daily support. So what is the probability that price typically reverses at my daily support level? Very, 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 very high. So I took my profit right there, because why do I want to risk price basically reversing on me after it gave me a 1 to 5 risk reward, 460 pips? Why do I want to do that? That's stupid. Price gave me the profits. It gave me the money. Let's just go ahead and take it. Looking into, where was I at? I was up here. Yeah, looking into this example. And then after that, I continued on with the sells. I had my confluences, Fibonacci retracements, all of that stuff. Continued on. What do you see here? More buys, more buys. I get clapped. I get clapped. Losing is a part of the game. That's another thing you have to understand when it comes to trading as a whole. And like I said, targeting the bigger zones is my biggest thing. Looking at price, what is it doing here? It hits my overall profit target right here. What do you see here? A 1 to 3 risk to reward ratio. I am, like I said in my trading rule, I am perfectly fine taking a 1 to 3 risk to reward because I'm risking 1% to make 3. What is my daily goal? Making 1 to 2%. Why do I want to try to make 10%? That's me being greedy. And one of my rules, leading back to my trading plan, is do not be greedy. Do not experience greed. Guys, I'm telling you, if you guys do not have a risk management plan, if you guys do not have a trading plan, this is probably one of the reasons, if you're not profitable, that you're not being profitable. This is the biggest thing that you want to make tonight. If you guys have any questions at all about making it, please, please, please ask me in the Discord chat, and I will help you guys out the best way that I can. I want you guys to fucking win in these markets, because once you understand this, and you really use this to your advantage, you will never go back to a 9-to-5 job again. And not only that, but you will create the wealth to fund whatever enjoyment, whatever it is that fulfills you as a whole. So moving on off of that, made my 1 to 2, continued on, got clapped right here after I took the buy, continued, got clapped right there. Coming over here, what happens here? Price hits my targets. It hits what? My 1 to 1, stops move to break even. Soon after, what does price do? It holds this new structural level of support from previous resistance, continues on, and goes all the way up. I could have closed out right here, but I continued on with the trade. I quote unquote, like I said, this is back testing. In my head, I already took partials, right? I took partials and I was like, okay, if I made 1 to 4 already, I'm fine just risking 1% and leaving 1% on the table because I will still be up 3%. What's my goal? 2% overall max. I'm already up over my daily goal. So I continue to hold to my next overall structural level. And what did price do? It hit it completely. Continuing on. And I think that's the end of backtesting. So now with all that being said and done, I'm going to do a little bit of a market analysis on gold as to what I'm expecting tonight. So then we can go ahead and wrap up the webinar as well. So looking into this, after I do this, I will continue, or I will stop the recording, and then we can just do like a little bit of a Q&A. Looking into this, looking into gold as a whole, looking into the 4-hour time frame, as you can tell, we are at a very critical point right now because of the fact that price is at a happy medium. It can go either way. We are closing above previous support, now acting as a new support level. So the next thing that I could see is price. I'm not in this position right now yet, but what I'm expecting is for price to come back down, retest previous resistance to then act as support right down here, to then take a buy position back up to the top side, right? So after we take that buy position back up to the top side, I ideally want to target my daily level because of the fact that if you look at this, you can see some sort of a falling wedge pattern right here. And not only that, but we can fit in some sort of a channel within this general area right here. So you can see some sort of resistance, some sort of a support, so on and so forth, right? So like I said, what's the probability of price reversing over here? Very high, daily level, right? Scaling out to lower time frames, all I'm waiting for is for some sort of a break and retest right there. We already have our bullish engulfing confirmation, so why do I want to take a buy all the way up here when I more than less know that price is going to retrace if it does retrace? If we miss it, we miss it, and if price comes to our level, then we just took the most optimal entry that we possibly could. We draw our Fibonacci, swing high, swing low. What do we line up with? Basically our golden zone. Whether you draw out your Fibonacci from right here, whether you draw it out from the very impulsive move, which could be right here as well, line up with the golden zone. 38, 50%, boom, golden. First target would be my 1 to 1. Second target would be my 27, or sorry, these highs right here, 27, 61, and then overall target is my 1795 point, right? So that's going to be for gold. Looking into GU, really what I want to see on GU is I want to see a break above this no trade range right here. I'm not in this entry as well, but I just know that I want to take buys. I want to see a break above this no trade zone. I want to see a retest to then continue on. If not, I'm going to wait for a break to the downside because we're in a very bearish market to then continue back down with the retest. Looking into GJ, I want to say buys, I want to say sells. It's super overextended in my end. Looking into the daily time frame, I am still waiting for some sort of retracement back up into this level. So we're just going to have to be very patient. Overall, like I said, we're at a very major level of support. So maybe a double bottom on the 4-hour, 1 hour could very easily up the chances and probability of price going up. So I'm going to wait for price to come back down. If it gives us a double bottom, I'm going to then continue long to potentially this high right here. If price wants to continue to melt, which could possibly happen because if you look back right here, support acting as a new resistance, price could very easily just completely melt from this point on. Some people could more or less just scalp this entry right here, stops above that level, and then target right down to there, boom, making you about a 1 to 3 risk reward ratio. But it could very easily just obviously turn around and continue back up. We're not trading below the blue SMA, so it's pretty much a risky trade. So we're just gonna have to wait and be patient on that. That's basically the entire breakdown. I'm gonna go ahead and end the recording now, so then you guys can just go ahead and ask me questions.